Want my latest market insights? My latest report, We Are There, is now available. Scan this QR code or click on the link in the description.
Somebody mentioned sell calls. Well, we are starting to see a little bit of that tail kind of wagging to the upside there. So it's not as cheap as it was. But so I think in some shorter term positions, for the first time in quite a long time, I could feel like, okay, I could be compelled to maybe sell some calls in here. I did on a few different positions. I tend to do that sparingly just because if we're in breakout mode, I don't really want to get in the way. But there are times where you kind of get to a spot where you feel like, okay, and like I said, this is the signpost. Maybe we kind of muddle about for a little bit here until we sort of sort things out. As this rotation happens, sometimes you're just going to get a whole lot of nothing happening from an index level, even though below the surface, there's a little bit of moving about. And so that's a chance for you to maybe kind of lock in some of those gains if you don't want to sell out of your positions. And then downside skew, it has come in a little bit. And what I mean by that is those out of the money puts, shorter term, coming down a little bit in the S&P complex, but still, they still price very well. So I put on I was worried a little while ago on NVIDIA. And I agree. I think Google, TPUs, you've got a few, Amazon, you've got Meta, although I don't think they make those available commercially, but there are many efforts out there to kind of create their own chips and more energy efficient chips and things like that. So they're going to have a bit of their work cut out for them at some point, as these companies don't want to outsource to all these expensive NVIDIA chips forever. So that could be a bit of a problem. So I've had some put spreads in NVIDIA, which are kicking in this week.
Anything I have below 173. That's my line in the sand, and it works great. It's going to we pierced that 171 and then 165 because we did that exactly the first time. And the first time it bounces at 165 post earnings. We did all this live. Second time it's going to break. And the second time it breaks, it's going to go down to 152. So that's my swing duration time frame. We've talked about this. So to me, those puts, depending on if you have time into end of year or put spreads, they make sense to me. I don't think they're expensive. I prefer that over selling calls. And the same thing with SPY. I don't think SPY is expensive or the NASDAQ is expensive to get directional puts or put spreads, depending on your time frame.
No, not expensive at all.
I don't mean a Friday, September 19th. I'm talking end of month, middle of
not
October.
Zero DTE. Don't trade the zero DTEs.
Not my game. You know that. What about long vol calls? I find them to be expensive, but it is what it is.
They're inching up. So I'm looking at Tesla, which that's unique because it's starting to go potentially represent a bit of a parabola if things get going with robo-taxi. We always put on a few positions today. I've had a strangle for a little while, sold out some stock and some long calls, and kind of reconsidered the last couple of days because we could be approaching. Tesla's kind of that moonshot factory that Google maybe used to be considered, and their power business is underrepresented, under sort of rated. So there's some interesting things there. It's a stupidly expensive stock, but if you start to look at where they could be, and this is about stories, right? If we are in a mania type market, it's going to be about stories, and Elon is going to benefit from that. But there's some other ones where I'm looking at NVIDIA, still not expensive. So if I look at 6-month option pricing, really not expensive very much at all. It's kind of inched up just a little bit. Amazon, a little bit more. If you look at 1 month or 2 month, you've got to sort of incorporate earnings into that. So they may not kind of give you what you want. So if I look at 6-month options on Amazon right now, have really bounced back from around 28 all the way to 31 or so. Now that doesn't sound like much, but for a 6-month option, that's a fair bit. So I was looking at some Teslas today and looking at potentially long-term plays, and one play was going to cost about $88,000 to put on. And with the jump in volatility that we've seen in those contracts, you could very easily give up about $3,000 if that volatility compresses a bit. That's your Vega exposure. That's not theta. Theta is that daily kind of erosion that happens through time. But when options get a little bit more expensive, if they want to reset, if the market just kind of goes quiet and they decide, well, Tesla's should be at $400 for a while, then that will compress. So you always have to think of, that's why I like to look at those volatility charts, because it's not that I don't necessarily want to buy something that's expensive. It's that I want to have in mind, well, what's my downside if I'm wrong, not just on direction, but if I'm wrong on perhaps things going a little bit quiet. That's always a real reality with options, because as we know, they are an instrument with a limited lifespan. So you have multi-dimensional risks that you have to keep in mind. But having said that, I don't think they're crazy expensive. But as we've often talked about, Samantha, they're starting to kind of price in, are we about to melt up even more on whatever? whatever, AI or whatever, flows, sentiment, looking at some sentiment indicators this week, people are still not that bulled up. I know the market is bulled up, but if you look out there, people aren't super bulled up from some perspectives. And anecdotally, from people that I talk to all the time, very hesitant. People have been having trouble going long for the last 400 or 500 points. It's hard. Everyone's like, is this the top? Is this the top? Then we move up another 100 points. Is this the top?
Well, I don't know about any of that. I mean, the sentiment or anecdotes, I honestly just study my very diverse system of looking at macro and quant and intermarket and technical and fundamental and a little bit of sentiment. But what drives me in this particular case is that I look for triggers that could create the selling, and then the CTAs that pile on that are just waiting. They're not buying anymore. They're fully satiated. They are just waiting for those negative gamma prints in order to sell aggressively. And the dealers just pile on and the fall funds just pile on. And we could be very quickly looking at a fast VIX move that reprices everything. So, and anybody who knows me, and like I'm looking, I can stalk macro bearish every day, but not tactically bearish. So for me to put out a warning, it's time to protect now. It is not just end of month, Rish, because you're asking how do you reconcile the short term end of month caution. For me, it's definitely protect in the short term, like I did this morning pre-market and gave the levels, and we happened to hit 3 of them. I'll show you in a second. Anyway, the point is, but it's also end of year. So if you read my piece yesterday that was quite long, a very large bet came in, and this is in the SOFR market, which is very complicated, but it's institutional, that is betting on weakness into end of year. And it's not a little bit of weakness. It's recession weakness. So I have been beating the drum that yes, the top line looks fine. Even my breadth underneath selling looks fine. But when I start to see huge institutional bets that are probably hedges, right? Then I start to say, end of year is also a risk, not just the next 2 weeks. So what happens if we do have that nice little pullback post Friday, September 19th, and then it doesn't bounce?
Well, then that's
you got some skin in the game. You don't
Yeah.
have to take those off. They're already going to be expensive, but you don't have to buy expensive then.
But that's the gift. That's the low vol is the gift that keeps on giving. I don't know, maybe not that good, but it's a gift for us because you see that volatility. I saw the beta of the VIX to the S&P. It is absolutely in the basement. We've been talking about that since last year, and there have been times where the VIX is like a frightened cat in a room full of rocking chairs. It is literally it's moving on literally anything, on any pullback. It doesn't care at this point. So you're right. Bond vol doesn't care. VIX doesn't care. VIX futures, nothing really cares. We have one of the steepest contangos that we've seen in a very long time. There is not a care in the world out there. There's not a belief in the world that we're going down. Now, people buying out of the money hedges, sometimes that just enables them to stay long. So sometimes it's hard to kind of read into that too much. But we know that the hedge funds, from some of the things that I'm reading, hedge funds are super short VIX. And that upside is indeed what you're talking about, Samantha, which is this potential powder keg. If it's not going to be on a 0.5% sell-off is in this kind of environment is going to be bought up. A 1%, probably not too bad. A 2.5-3% sell-off could very well turn into a 5 to 7% sell-off. That is kind of the world we're in, very much volatility clustering. So it's very much that the market is well bid, even on little sell-offs. But you're right. If it starts to get going with this extreme short positions, it's a very crowded trade right now that people are playing. There is this asymmetric risk that if a shock of some sort emerges, it could start to unravel the other way. And we won't recognize that because we'll say, wow, we just came through months and months of not a worry in the world. And suddenly everyone's panicking. And that's the reality of CTA vol targeting you were talking about.
Yeah.
Absolutely bulled up. They're absolutely
So that's why I'm cautioning now, is because I have watched the CTAs and I have written about the CTAs all the way up, all these different mechanical buyers across the board. There's like 5 categories and I write about them, and now they're not doing much. So we're still grinding up on the wall of worry that you write about, but this is different. So when we get selling and we trigger negative gamma, the likelihood of selling begets selling by these CTAs is enhanced. So what I'm saying is, even though I've had 6666 as a price target for many moons, I don't know if we're going to get there, but I don't want to wait 60 points. I want to warn clients now of what I see.
Join Samantha and Hans at the next Macro to Micro Options Power Hour held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here and subscribe to LaDucTrading YouTube channel for more content.